Hello all traders and investors, welcome to Strike. Today we'll understand price action through an essential concept of the Dow theory, that is higher highs and higher lows, and their bearish counterparts, that is lower highs and lower lows, through the lens of multi-time frame analysis. So let's dive right in. This is not just a theory but a practical approach to catch market trends in its entirety. Dow theory lays down the foundation of technical analysis, focusing heavily on the analysis of market trends. One of the critical teachings of Dow theory is analyzing the peaks and troughs formed in a trend. Today, we are concentrating on spotting this higher highs and higher lows, as well as lower highs and lower lows pattern on a chart to analyze in which direction the trend is going. So, first, let's just get into higher highs and higher lows. So in a bullish market, you can see that each peak is higher than the previous peak and each trough is higher than the previous low. So this is nothing but the concept of higher highs and higher lows. In simple words, each time the market rallies, it goes beyond the previous peaks, and each time it goes down, the low it forms is higher than the previous low. Conversely, when the trend is down, you would see the market making a high that is lower than the previous high and then making a new low that is lower than the previous low. So let me draw one more trend here. So if the trend is down, each peak will be lower than the previous peak and each low will be lower than the previous high. Next important part is to recognize how the reversals take place with respect to Dow theory. So imagine the trend is up and the stock is forming higher highs and higher lows. The moment it breaks the previous low, that is this level, and the next up move does not go beyond the previous high that it made at the top, and again it makes a lower low. This is when the Dow theory says that the trend has reversed down because the price has made a lower low and then a lower high and again confirmed that with making further going below that low. So this is how to spot reversals using Dow theory. Now it is very important to understand the importance of time frames. So larger the time frame, larger is the implication of that time period, and lower the time frame, more is the noise in the trends. So if the trend is up on a larger time frame, like a monthly time, so let's say on the monthly, this is just one swing. So when you go down to weekly, you would see that within this uptrend there are peaks and troughs. So it is important to understand the importance of primary trend. So that means if the larger time frame trend is up, what you would want to see here is you would want to spot this reversals on the lower time frame and trade in the direction of the trend. Now selling here and shorting for this down move may not be that rewarding, but then going long at this bottom and riding this uptrend. Why? Because the larger trend is up and you would want to be in the direction of the trend. Now the same thing is true for a downtrend. Let's say on a larger time frame like a monthly, the trend is down and you go on weekly, then you will see lower lows and lower highs. So similar to what I discussed right now, here it would be important to spot these kinds of reversals so that you know that you are in the direction of the larger trend. Now let's see how we can easily spot trends using this concept that we have discussed in Strike. So all you have to do is go into Discover and then into Scanners. Then you will see here Dow Trend Scanner. Now you can either see the trend based on live candle or you can even look at previous candle close. Now, since we are looking at closing prices, some people will prefer to look at only confirmed signals, that is on previous candle close. So you can select the basket you want. You can even select your own watch list. So I've just selected indices as well as FNO basket here. So what you can see here is now we have given the trend according to Dow theory based on 4 different time frames at one place, that is hourly, daily, weekly and monthly. So you get to know where the larger trend is. So let's try to pick up few examples. So the first stock here, we can go from top to bottom approach. So firstly the monthly chart. So you can see this stock was in a large uptrend before it gave a up to down reversal back in January, and then it was in a downtrend, and now it is giving a bullish reversal based on Dow theory, that is going above this high on the monthly time frame. This way you can go down to each time frame to see how is it performing. Now on the weekly also it is forming a higher high, that is going above this high, and similarly you can go down to which time frame you would like to trade to spot different reversals. Let's say it's about 3 p.m. in the day and you're looking for reversal signals. You want to look for stocks that can have potential movement in the coming days. So how would you like to proceed? So there are multiple approaches one can use. So I am focusing on a top-down approach. That is, I want to see if I'm looking for bullish trades, I'm only looking for stocks whose monthly Dow trend is up. So I'll filter here up, and I will also want to see whose weekly Dow trend is also up. So now I am getting the stocks only with weekly and monthly time Dow trend up. Now I just want to see reversals. That is, on the shorter time frame, the trend is going to up from down. So it has had a minor dip, but the larger trend was still up. So I'll select down to up. So for today's session, I'm getting 3 results only. What it means is these stocks had larger trend already up, but the daily time frame is hinting at a small reversal. So one can look to go into the direction of the trend. Now you can see this is a L&T Housing Finance. So let's start with the monthly time frame. So you can see monthly trend has been up since March of 2022, and on weekly it has gone into down for a couple of weeks in between before going back into green mode, and now the same is happening on the daily time frame. So the color coding on the chart helps you understand very easily that when the signal was down and when the signal was up. So you can see very clearly here the on the daily chart, it has been able to capture most of the trend with respect to this green and red color coding. Now, since these signals are based on the raw price movement, it will obviously be faster than any other signal, any indicator or any momentum indicator, because all those indicators are smooth to give a slower signal. So there can be a few whipsaws also here and there. So it's always the best practice to confirm your signals with a handful of indicators more. But to capture fast trend reversals and signals, Dow Trend would be the first one to give you a reversal signal, as it is based on the raw price movement itself. So today we have covered how the concept of higher highs and higher lows and lower highs and lower lows play a crucial role in identifying the trend in the market and sticking with the right direction by using multiple time frame approach. So if you liked the video, do hit like button and subscribe, and let us know what topics you would want us to cover in the future. And I look forward to all of you using Strike at web.strike.money and using the Dow Trend Scanner, and do let us know how it helps you in your trading. Thank you.